I'm going to show you how to legally avoid paying tax in the UK so that the tax man isn't taking his cut from your investments. And if you like the video, please drop me one of these to help beat the YouTube algorithm. Firstly, in order to know how to avoid taxes, we need to be aware of what taxes are available that will be a threat to our investments. To start, we have capital gains tax on stocks and shares, which is realized when you make a gain and then you either sell or dispose of that investment. This has varying levels of taxation, but this is the first thing that we need to avoid, any profits. Secondly, we then have a dividend tax, which if you didn't know, some stocks pay dividends. These dividends are subject to taxes as well. And we also have stamp duty tax, which is taken on the purchase of specific stocks and shares. But what we do have in the UK is a very generous set of allowances. For a start, we have a £2,000 dividend allowance. This means you can receive up to £2,000 in dividends without having to pay tax, which is a really good thing if you don't plan on having a large portfolio. However, if you're thinking about building up your investments for the long term, then this isn't actually that good of a thing, because whilst yes, it does give you that £2,000 of tax-free dividend income, this could be subject to change in the future, and this is only what it is in 2021 till 22. So this could change drastically in the future and you could end up paying more taxes, and so you're at the mercy of whenever it is changed. Furthermore, we do get a very generous capital gains allowance of £12,300 per year. Once more, this is a generous allowance, although this could be one of the first things to go if they're looking to increase the budget or they're trying to make some serious tax cuts. And so this is another thing to be careful of, although you can kind of see that in the UK, you would do better if you were invested in stocks that would appreciate more than pay out dividends, as you have more of an allowance to deal with. Although this capital gains allowance does overlap with other things, but this could also be taken from property and many other things, so the capital gains isn't just exclusive to the stock market. And then we also have the stamp duty or stamp duty reserve tax, which is 0.5% of all online stock purchases, or if it's 0.5% if you pay more than £1,000 to purchase stocks offline. And there is no allowance for this, so this is something that most investors will have to deal with. Fortunately, the number one solution to avoid 2 out of 3 of these taxes is to open a stocks and shares ISA. You could also open a stocks and shares lifetime ISA, which may provide similar benefits as well. The ISA is a tax-free shelter, meaning all the money you put inside it will not be subject to tax. This means you could put money in each year and consistently build this up, and then you could have a very large lump sum of wealth that is tax-free, so that when you come to cash out your investments, you are not subject to any tax whatsoever, including income tax, which is something that a lot of investments usually bring up the band of, and so people try to aim to withdraw certain amounts. This gives you that freedom in the future where you could just withdraw the whole portfolio if you really wanted to. In fact, this is exactly how I avoid, and I do not pay a single penny of tax on UK stocks and shares. I use the FREETRADE UK app as my stockbroker and subsequent ISA provider, and if you're interested in signing up to FREETRADE, I'll leave a link in the description down below, and if you sign up using that link, you can get a free share worth up to £200. ISAs, stocks and shares ISA, are a very good investment vehicle, and in fact, I'm personally very grateful to be a resident of the UK to take advantage of this. That's because £20,000 per year, and this could be subject to change, but as of right now it is £20,000, you can deposit £20,000 each year, and you can just keep building that wealth up and up. For a lot of people, this is more than they can afford to invest, and so they're likely not going to be maximizing that ISA shelter. But it is a great investment vehicle, which means you will not be subject to any taxes. And the same with a lifetime ISA, which does eat into that same allowance, although you can only deposit £4,000 per year, although you do get the government top-up, 25% even. These stocks and shares ISAs allow you to avoid capital gains tax, as any gains made inside the ISA shelter do not even have to be declared. So that's good. That means if you're filling out a self-assessment form for taxes, if you're invested inside an ISA, you don't need to worry about including that in your form. Same with the dividend income. It makes the need of tracking all of your investment income obsolete, because all of it is inside a tax-free shelter and is virtually ignored by HMRC. Furthermore, there is one tax, however, that you can't avoid in an ISA shelter. Well, there's two technically. On UK stocks, there is that stamp duty tax, which takes place on 0.5% of those stocks. However, you can avoid this if you choose to invest in index funds, exchange traded funds, or stocks listed in the AIM markets, as technically they're in the AIM markets of the London Stock Exchange and they aren't regarded legally as listed companies, and so they do not need to be paid stamp duty. So this does mean if you were looking to buy FTSE 100 or FTSE 250 companies like Unilever, Games Workshop, etc., you will be subject to stamp duty, although I personally think that it's only 0.5% of the purchase. And I think that if you really wanted to buy a quality company in your portfolio, it's not really that big of a deal, as it's only at the initial purchase and it's not taken off as you sell the investment. There is one more tax to be aware of if you are an investor in the UK, and many UK investors do look overseas for investments, and so you may be looking at the US stock market. However, they have dividend withholding taxes. This is an issue because that means they're effectively reducing your dividend by a substantial amount. Whilst you can fill in a W8BEN form, which halves the total withholding tax, you will still be liable for 15% on US dividend income. However, if you invest your money into a self-invested personal pension or SIP, you can actually completely negate this with specific brokers. That's because they can apply and the US would then recognize this SIP as a pension, and so they would then completely remove the withholding tax. Although this is a complicated process and only specific brokers do it, and I'm not sure which ones do. This would allow you to avoid that dividend withholding tax, and inside a SIP shelter you're effectively tax free. There are some catches though. So when you initially deposit money, you get tax relief, depending on your income tax band. If you're a higher rate taxpayer, that's 40% tax relief on deposit. This allows you to build up your wealth faster. Your money inside this SIP is then invested tax-free. However, when it comes to withdraw it, which would be at the age of 57 after 2028 or 55 before then, the downside is that you're likely going to be paying a lot of tax. The first quarter of the portfolio is tax-free. However, after that, it's dependent on the current taxes available at that given time, and the fact that you have to invest for a majority of your life, especially in my situation, I wouldn't be able to withdraw it until a very old age. However, this can allow you to avoid those US withholding taxes and allow you to get a jump start in your investments if you so choose to. And this is how I effectively managed to avoid paying tax on any of my investments. A majority of my stocks are in a stocks and shares ISA, or when I did have some investments, I made sure to stay well within the capital gains allowance. For instance, when I bought Argo Blockchain, managed to fortunately and very luckily double my money on that investment, cashed out and put it into my ISA without having to pay a single penny of tax. If you're interested in how many shares of a stock to get £100 in dividend income per month, then click the card at the top right of the video. I'm Foreman, thank you for watching, have a fantastic day.